Concerns about slowing global growth have been in the news recently. Is the global expansion coming to an end?
We don't think so. People forget the natural way an economy grows. It doesn't grow perfectly straight up. It kind of grows like a staircase. It's got stronger growth periods, followed by not as strong growth periods, but growth periods. And so what we think is happening right now is almost similar from a global growth standpoint, is very similar to what happened in 2012 and what happened in 2016, is that you tend to get slower growth periods in an economic expansion. And that's what we think is happening right now.
So normally when that happens and you're been in an expansion and bull market's been going on for a while, people tend to say, it's too old and it's slowing, it must be dying. And this is, in fact, the topic of one of my recent USA Today columns, which is that concept is thought of by people like they think of biological life, as if you've got a point in time where senescence, or the biological tendency of your cells to stop splitting, leads you to death. And the fact of the matter is, that's not the way this stuff works. It never has, it never will. That's not the way growing economies come to an end. It's not the way bull markets come to an end. The reality is all, again, as I said earlier, this is pretty normal stuff. People just have a hard time seeing what's normal.
The stock market's always a step ahead of the economic data as well, and that's playing out classically too. And I think that one of the best things investors can do is recall back just a few years ago to the 2016 time period, which was a China-led global sluggish growth where people were talking about a renewed global recession. There was a stock market correction of pretty significant size, and the market recovers before the data does, and that's precisely what we're seeing today. Here we are now past the halfway point of this year. The correction, which anticipated perhaps, let's say, a slowdown that's occurring at the moment, things are already accelerating forward, and by virtue of the fact that the markets sit at or near their all-time highs today is pretty good indication that what the data looks like for the rest of this year is probably going to be better than most anticipate.
I mean, the irony is people have been fearing this slower rate of economic growth going all the way back to 2009. I mean, you can go back calendar year after calendar year after calendar year since this expansion started and find fears of slower economic growth surfacing up in the media. And it's true, by some measures, depending on how you calculate it, this has been one of the slowest growing economic expansions of all time. And we can debate some of the reasons for why that might be the case, but the fact of the matter is the global economy is growing at a 2-3% clip. You've got relatively tame inflation and inflation expectations. And against that backdrop, you know, we've kind of described that in the past as that Goldilocks scenario where things aren't too hot, aren't too cold, and that's an environment that stocks can really thrive in.
And the fact of the matter is, it doesn't matter so much to the stock market whether you're getting really fast growth or slow growth. What the stock market hates is a real economic downturn, a recession. And as Mike pointed out, it tends to move in advance of that. But whether you're getting just slow, sluggish growth, medium pace growth, real fast growth, stocks have done well in all of those environments. They've got a high frequency of positive returns. They got decent average returns. And so when I see people lamenting not so much a recession, but just slower growth, that really just doesn't matter too much to the stock market. As long as the economy is growing at some reasonable pace, doesn't matter if it's slow, medium, or fast, stocks have tended to do well in all those environments.
And for views on current events in the world of investing, visit marketminder.com. Updated daily, it offers on-demand access to Fisher Investments' most current thoughts on capital markets and the global economy, as well as our sometimes irreverent commentary. We hope you will enjoy it.